Hi and welcome to another edition of TraderCast's Daily Market Report. We're looking at Euro Dollar, multiple time frames. Obviously, daily time frame is confirming a clearly defined downtrend with price action currently trading well below falling 20, 50 and 200 period moving average. From the fundamental point of view, last week we had FOMC minutes and the indication for the next year and this year, and obviously increases in interest rates. And then obviously last week we had a letter from Mario Draghi about ECB intentions and QE. So from a fundamental point of view, this is quite bearish. This is a 4-hourly time frame. We saw a massive sell-off on couple of Fridays ago when the price actually gapped. That's still a very relevant point of reference. So the 4-hourly is pointing to a downtrend as well, but the current price action appears to be oversold bounce back. The price is above 20 period moving average at 1830, but it's clearly capped by this 1950 and then obviously 20 here, so 120. An hourly time frame appears to be pointing to a fairly similar levels, but this 20 and 50 period moving averages and the sequence of slightly higher lows and higher highs are pointing to maybe an oversold bounce back with a logical support at 118.10, 118.20. But very strong and clearly defined resistance by 1970, 1950 and yet again 20. And then 15-minute time frame appears to be very similar to that, but also the price action is currently above all of the three moving averages. So let's go into our charts and identify some levels. So all levels apart from 50, all time frames apart from 15 minute time frame appears to be in a downtrend. So the point of reference for Monday would be this area here at 1850, 1860, which would correspond to these lows here. So if the price goes into that level and then we get a confirmed rejection, then a logical downside or a take profit targets for anybody who's willing to short would be at 1820, 1800, but more clearly at 1780, followed by 1750. A loss of 1750 would indicate a continuation of this clearly defined downtrend and potentially looking for further downside towards 17, maybe even below 17. Alternatively, if the price either pulls back and then rallies or rallies and breaks through this 1850, 1860 area, then obviously these upside resistances come in play, which would be yet again potentially some opportunities for bearish traders to look to initiate shorts. So 19 followed by 1950 followed by 20. This 20 area, 120, is a really strong resistance, purely because it's this falling resistance trend line, and it's also referring to this a price gap that happened before we saw this further selling as well. In addition to all of that, we are seeing a little bit of a softness and consolidation in dollar index, which is currently testing some serious resistance areas based on monthly and weekly time frames. So bullish dollar index means bearish euro dollar, but potentially we could see a little bit of a softening in dollar index unless we break through this 92.60, 92.74 area in dollar index.